Hello friends, my name is Dima, welcome to Liberty Investment channel. Today I want to show you fundamental and technical analysis of 130 years old pharmaceutical giant Merck. And first of all, I want to inform you that informational on the channel is provided for informational or educational purposes only. All trading decisions made on the basis of information from the channel as well as their consequences are only your own consequences. So let's go. Okay, let's start from fundamental analysis. I will show you the data from Simply Wall Street website. And first of all, let's see on the snowflake analysis. You can see that it's divided by dividend, value, future, past and health. And all of these values are around on the middle, but dividend is very high of this company. So it shows us the very good value of this company. Let's go to price to or share price and fair value. You can see that it's undervalued by 47% because the fair value of the stocks are around $140 per share. So let's see if in the future the stocks will be cost such value. Price to earnings ratio is not bad but not very good because it's on the middle between industry and market. When industry is 28 point, market is 21.5 point, the company price to earnings is 26.7. So it's not good but not bad. Price to earnings growth ratio according to Simply Wall Street is poor value. I want to tell you that this is just analysis of this website. On the other website, the analysis should be different. Price to book ratio is high, while industry is 4.9% and market 2.6%. The company price to book ratio is 6.4. It's not good for current price. But let's go to the next point. We will skip forecasts of the company. Let's see earnings per share growth forecasts. So earnings per share previously was on uptrend. Today its earnings per share are decreased, maybe because of sales are also decreased from the past quarter. But according to forecasts, it will be grow up. Future return on equity is very high. It's around 46%, while industry future return on equity is 70%. This is just forecasts, so let's go through next points. And this is very interesting thing, earnings and revenue history. As you can see, the earnings and revenue from the past 6 years are more stable. Yes, it's not growing up, but it's not falling down. But from the previous quarter, earnings fell, but revenue of the company are stable as it was previously. Also, it's not very good for the company. According to past earnings growth analysis, you can see that from the past 5 years, the annual earnings growth was the same like industry earnings growth, around 23%, while market earnings growth were 12%. It's very good. But from the last 1 year, the earnings were fell down around 28%, while industry was 12.7%. So last 1 year was very not profitable for the company. Return on equity is on the high level, higher than industry. Return on assets are the same like industry. Okay, what about financial health? You can see that there are short-term assets and liabilities and long-term assets and liabilities. First good thing that short-term assets are bigger than short-term liabilities. The second good thing is that long-term assets are bigger than long-term liabilities. But the third point is not very good because short-term assets are bigger than long-term liabilities. So here are 2 from 3 good points. What about debt to equity history? As you see, the equity of the company is falling down from the past 6 years. It's very bad. But debt is stable, it's much stable. Today, the debt and equity of the company are the same. So if it will be a big crisis for this company, it is a very big risk that this company will not have enough money to continue the production. You can see that dividend yield is 3.5%. Merck pays this dividend, has been paying these dividends for last 10 years. And these dividends, I mean the dividend per share is increasing, so this is very good for this analysis. It's very good. And let's go to investing.com, where we can observe the income statement. So let's go through the main points. I will start from annual and then I will move to quarterly statement. So as you see, from 2017 the operating income were growing up until the year 2019, but the year 2020 was less profitable for the company, maybe because of crisis. Also the net income had the same situation. It were growing up until 2019, but in 2020 the net income fell down, but it's not in minus, it's still in plus. And let's continue from technical analysis. First of all, I will show you the monthly time frame. What can we see here? You can see that there are some levels, some support and resistance levels. In November 2019, the resistance level was the same like it was in the year 2000, before crisis. So it means that stock price is very high now, basic on monthly time frame. According to RSI, it's not overbought or oversold, it's on the middle. And MACD is now on the middle. let's go to daily time frame. I will open also Ichimoku Cloud, Ichimoku strategy, and okay. But first of all, I want to add here one trend line. It will start from 2009. Okay. And it will be like this. Okay. So we can see here 1, 2, and 3 touch points. Maybe here was 4, but yeah, 3 touch points. Now the price is very high from the trend line. It was also very high during March coronavirus pandemic, but now it's going down. I will open daily time frame and let's go through this time frame. So I entered here the support level, which touched on June 2020, on October 2020, and it's also touched it now. As you can see from RSI oscillator, it was oversold. MACD oscillator was also oversold, and both lines are also crossed between each other, so this is one of the signals that the stock price will go up. Yeah. If I open 1 hour time frame, I typed here some resistance level when this company was here. So it was consolidated on this resistance level. But then it started to go up, and it was a potential to buy the stocks. Especially for me, I bought the stocks here in this point when it was a confirmation by 1 hour. It didn't cross through the Ichimoku cloud by 1 hour. That's why it started to fall down. But as you can see on the daily time frame, it is in oversold area, so it has a potential to go up. Probably the stock price will fall to this support level, $74 per share, but I think in the future this stock price will go up at least to this resistance level of $77 per share. So this is my forecast for the future. Let's wait for the time when this stock will show us its direction. At the end, I want to tell you that it's not a recommendation to buy the stock. All the positions you open, you must to make based on your own analysis and your own decisions. If you like this movie, put your thumbs up. Remember to subscribe to the channel Liberty Investment and turn on the notifications to follow all new videos. If you have some questions, type it in the comments below. If you are looking for a platform to buy the stocks, register in Trading 212 and use my promo code after registration to get one free stock up to $100. The promo code will be attached in the description of the video below. Thank you for watching this movie, wish you successful investments and see you next time.